Good morning, everybody. Welcome to the Flow Show. It's Friday. We got here in the end. Still lots to go. All sorts of stuff happening. Oh, it's going to be another hectic day, another volatile day. And looking forward to it. Quite enjoyed yesterday. Lots of moves. Who needs data? We have plenty of stuff coming up, headlines and whatnot, and plenty more to come. Certainly not going to be able to take half an eye off the trading screens, I can tell you that. Right, let's get stuck into it. What's that, Brian? You can hear crackling? Oh, here we go. Right, let's try and work that out. Give me a second. Is that any better? Nope. Right. These things are sent to testers, I tell you. Right, let me see if I can tinker around with this. How's that? Better? Hello, 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 hello. Nope. For fuck's sake. Right. How about that? Oh, right. Well, it'll have to do, I'm afraid, boys and girls. I still can't come out. Is it so bad that you can't hear me? It's nice one, Dimmy. Is it so bad that you can't hear me when at all, or is it just a little bit? You can hear my voice. It's okay. All right, we'll have to get on with it. There's not much I can do about it, unfortunately. Yeah, got no choice. No matter Brad, you have to deal with it, unless you want me to do the flow show silently by telepathy. You can all guess what I'm going to be talking about. Anyway, let's go. Right, lots of fun and games in Japan. Yesterday, Party Chief Takaichi came out with some comments really all over the place. Said we'll need to pass legislation through Parliament to cut gasoline tax, compile a supplementary budget, as otherwise the cost of living will hurt consumption and worsen the economy. Says we'll immediately issue an order to compile a stimulus package once chosen in Parliament to become the next PM. Then she said she didn't see an immediate need to revise the Government Bank of Japan joint agreement. This was something she said she may look at upon becoming PM. That's what the market spooked. Yen weakening, but then that sent it the other way because the market thought that she wouldn't be changing that agreement. That's a 2013 agreement, but she wasn't done there. Dollar yen had a nice little dump off down to the low 152s. Then she said, no, it's very important for the Bank of Japan's policy to align with government policy, and that's all price rallying the other way. Then she said she doesn't want to trigger an excessive yen decline, so dollar yen coming off. But says she's not in a position to comment on a rate hike. Says there's both benefits and demerits in a weak yen, which provides a buffer for exports but pushes up import costs. And then she said, I have never said Japan doesn't need to be mindful of fiscal discipline. So dollar yen running all over the place. And then as far as passing anything goes, that might be something that's going to have to wait. Yes, yeah, someone's already said that we have to deal with it. I can't change it. Because the Komeito party has exited the coalition with the LDP, with their leader Sato saying that they still have differences over funding issues, will not support LDP candidates in elections, cannot support Takaichi's premiership without alignment, that there's no strong commitment from the LDP. Will retract campaign cooperation with the LDP, but says if our proposals are accepted, we will vote for passing a supplementary budget through Parliament. The leader of the upper Japanese party, Takaichi, says we want to hold talks with the Komeito, sorry, not the DPP. Takaichi then came out and said we want to hold talks with the Komeito party again next week. Then the DPP leader Tamaki came out saying that the Komeito move shows a desire to end politics and the money issue. We want to join with Comito for a realistic solution, and that forming a coalition government with the LDP has become a meaningless discussion. So Mrs. Takaichi is in a bit of a pickle at the moment, because it may be unlikely that there's even a risk she doesn't get voted in as PM when we finally get to that Diet session. She's not got any coalition, so she's got no chance of passing any measures, including the supplementary budget. Makes it harder if she's got any fiscal bazookas in the wings that she wants to drop on the economy. So it's all getting a little bit messy in Japanese politics. Now, there's two items of thinking, or two ways of thinking within this. The reaction in dollar yen to that breakdown of Comito and LDP was yen buying. That was on the fact that she wouldn't be able to pass any big fiscal measures. However, that ignores the fact that that creates potential political gridlock, and the fact that she may not even get in as PM, which to me is yen bearish. So the market's been a bit pushed and pulled all over the place over this. It's becoming very messy, as I say. I would side with the caution that anything that's bad for Japanese politics is going to be bad for the yen, irrespective of whether it means fiscal easing or not. So that would be my bias for the yen from this point. However, I am long yen. Don't ask me why. We were messing around last night on all those comments. I am long yen. I managed to get a bit off half the trade off in that dump this morning. But yeah, I am a bit concerned, A, with my position, and B, that we're not done with further weakness. But if things do get resolved, if she hasn't got any big fiscal plans in the wings, and she becomes PM, then we could find a bit of a top form. But there's a long way to go until we get to this Diet session and what happens there. In the meantime, we've had some comments out from Finance Minister Kato saying he's recently seeing one-sided rapid moves. The government will carefully examine excessive FX moves. This is the step up in DEFCON levels that I was talking about the other day. I thought it might come when we were Tuesday, Wednesday, but we heard nothing. But we're getting it today. So a little step up in rhetoric over that. Now, for those of you on Intervention Watch, I've been keeping an eye on the trade weighted index, which is something that the JPY yen trade weighted index, which is something that the Ministry of Finance also keep a look on as their basis for whether the yen is weakening or strengthening. It's actually gone down since 2 days before the election last weekend. So when we were last playing with Intervention, it was up at around 83s, 85s, that sort of level. We're down at 77.06. Actually, today's is 77.05. It was 79.79 last Thursday. So it's come down since the election. So as far as overall weakness is concerned, it's not happening. So that's one item of risk removed from Intervention. So we are really just looking at the volatility aspect of things now. Right, I'm just going to ping Stel quickly just to see if he can nip in, then I can nip out and come back in again. Just bear with me 1 second. Right, just pinged him a little message. I'll continue, and if he can jump in, then he will do so, and I'll pop out and hop back in, and that might fix my mic issue. I'm going to move on anyway, because we did have a bit of data out from Japan. We had some PPI data overnight. I haven't even got my calendar ready yet. Have I? No, I haven't. Naughty. There we go. So PPI coming in little bit warmer than expected, which is good news for the Bank of Japan and their battle over inflation, up on the month 0.3 and unchanged over the last month, year on year, beating expectations. So that's coming in pretty well. 1 second, just checking if he's come through. No, probably on his yacht. We've also had a Bank of Japan household survey where households are still expecting double-digit inflation over the 1 year horizon. It says 88% of households expect prices to rise in 1 year versus a previously 85.1%. The median inflation forecast is 10%, with an average of 11.9. 84.8% expect prices to rise over 5 years versus 83.1% previously. So that's good for the Bank of Japan. They want inflation expectations rising because that can create an inflationary environment. RBA Governor Bullock says services inflation remains a little sticky. The labour market is still a little bit tight, but we could be close to balance. Consumption is starting to recover. Give me a second, just going to see if Stell's about, if he's in or not. No, not as yet. Sorry, folks. I have to stick with the sound issues. Over in the UK, there's a report from the Recruitment and Employment Consortium saying that UK employers are curbing hiring and pay ahead of Reeve's autumn budget. Pretty much saying that firms are going into caution mode ahead of that budget before they find out how much they're going to get slapped with more taxes and whatever. So that's not looking good. That's not going to help employment reports leading up to that budget in November. ECB minutes. There's a saying, it takes two to make a market. That was the case in the ECB minutes, because a few members viewed inflation risks as tilted to the upside, and a few members viewed inflation risks as tilted to the downside. And that's why rates aren't going anywhere for the foreseeable future. Over at the Fed's bar says a September cut was appropriate. Current policy rate is still modestly restrictive. Labour market is more vulnerable to negative shocks. Feels sceptical about fully looking through tariff inflation. So there may be two economies right now, because upper incomes are performing well and lower incomes are struggling. Now, you must have been reading that consumer borrowing report that came out earlier this week, in which I noted that it was the top 20% of earners who are carrying the other 80% in terms of consumption, retail sales and borrowing. So we do have a sort of two-speed economy going on, or two economies at the moment. And if that top 20% stop spending, then we're likely to see the proverbial shit hitting the fan, folks. Anyway, Fed's Daily says that inflation has come in much less than has been predicted. A little dovish tilt there. We had a 30-year bond sale in the US, all pretty much tickety-boo. The cover was unchanged. The splits were okay. Indirects up at 64.5 from a prior 62. Directs down a bit to 26.9 from 28. So not too bad there at all. No real worries in that. The old two to make the market is working in the US Senate. The Senate rejected yet another Democrat bill to end the shutdown, and then the Republican bill got rejected. So no end to the shutdown. They're obviously just punching their cards at work and going through the motion. Now, one bit of good news, depending on your viewpoint, we're going to be getting some data, because the BLS are going to release the September CPI data. It's due the 15th, I believe, next week. But it's not guaranteed it's going to be on that day. Probably could be later. We're yet to hear about that. But the reason they're doing this, they're calling in some people to finish off the data. It's already been built and compiled. They just need to finish it off. The reason why they're releasing this data is because this inflation data is used in the makeup of social security payments in terms of what the next level of payments is going to be, or some such like that. Don't know exactly, but this data is needed for those social security payments. That's why we're getting this data, and we're not going to be getting any other data, and we'll wait and see when this is going to be announced. Whew. That's it from headlines at the moment, thankfully, because they're coming thick and fast and markets are moving on the back of them. Let's see what we're not getting today on Friday. There's not much out from the US. Anyway, it's Canadian Jobs Day, so we're going to get some form of jobs data. Keep an eye on that, see how the old revolving door is doing. We had a bit of a wobbler last month, minus 65.5k, expecting a bit of recovery. It's nearly 3k put on there. As I've just mentioned, watch the revolving door as to whether those jobs move are. They were predominantly in part-time employment last month. Unemployment rate is expected to tick up again to 7.2, but as always, match that off against the participation rate. I don't feel the need to do a Canadian jobs competition. Maybe we'll spin the wheel later. Then we've got the flash numbers from the Michigan Consumer Survey, and given that we haven't got any other hard data, this one might be a little bit of a market mover. So make sure you keep an eye on that later, because we're not going to get the conference board numbers until the shutdown ends. So that's what we got coming up. Brian, if you're talking about the Hamas thing, well, it's all pretty much signed, sealed and delivered. So you can see what the market move has been on that. Not much at all. So we're probably over that. It shows we're not really trading around that at all. Yeah, there was probably a little bit of relief in gold when we first saw that first dip off the highs down to the 30s, but it's washed out now. So it shows you how much we were trading that, as I mentioned yesterday. So we might as well start off in gold. I've upgraded one of the lines. This one down here was a pinky one. It's now gone to a white one. Now I was talking in the chat room yesterday when we kept bouncing off this 4,000 level, but pretty weakly, and I was getting a little bit antsy that, particularly for anyone who might have been sitting in longs above 4k, because if that level broke, it was going to be a washout, and it did wash out all the way down here. So we pretty much confirmed this level once, which was good. We got a bounce to 4k, just shy. 39.95, which failed, and then another test of this level. So slowly now we're just getting some levels that we can probably more rely on than some of these other ones that, mess around in between. We're just now breaking back above 4k, so we're obviously not done in terms of potentially those tops. Just obviously up to here, 40.50 and those extension highs are going to be the important levels to watch now. If we're up there and we hit it and make a new high, even by a couple of bucks, then we're probably going to be off to the races and we're not done with the upside. If we pull up there or shy of it, 40s, 30s, something like that, hit our head, then we have potentially got something more solid up top. That any of you people who like to fight such strong trends, that's what the price action you want to be looking at. But in the meantime, just keep an eye on this 4k level in terms of what it does as a bit of a pivot for that. Dollar yen, as mentioned, that's been up and down, though it isn't going too far, to be said. I was looking to see if we got support in this 40-45 area. Yeah, we've had a ping down to...
Hello, mate. I'm here. Sorry.
You're there. Yeah, apparently my mic's right up, messing up. So I'm going to make you host, mate, and I'm going to nip out and nip back in again.
Yeah, go for it. Okay. Go for it.
You are now host. Right, I'll be back in a jiffy.
All right. So I don't know what he's been saying, but so a little bit of I wouldn't call it a reversal, but a little bit of risk off yesterday. Dollar strengthening, metal still going, even though silver had a really bearish daily candle, but it's up against the day. You back? Check your
I'm
mic.
back.
Check your mic.
How's that?
Yeah, that's much better. Much better.
Oh, there we go. There we go. Thank you very much, mate.
Interesting price action yesterday. Little risk off, not a lot. The dollar a little bit strengthening. Metals went down, but now right back up again. So let's see how this week closes. We don't have any big data today, do we? Anything?
No. Well, we've got the Michigan. We got
Michigan,
Canadian jobs and Michigan, so that'll be something.
Ooh, actually, I have to go. I'll see you later, guys. Okay.
Yeah, go, mate. Thanks a lot, mate.
Yes.
Well, he doesn't want to miss his slot. Right, good. I'm glad that's back. This bloody Zoom, I tell you what, drives me up the wall. Right, so I was looking at gold. So let's just finish that off. Yeah, so just watch what happens at this 4K level. We're having a little attempt there, but if we poke through and we can't get above and hold above it, then that maybe is going to inject just a little bit of selling pressure coming in. But the levels are building. You know the ones that you might want to rely on more than others. This is all just seeing what stuff messes around in the middle. But your main range looks to be between here and there, 39, 44, 45, and this 4K level, and then up towards those highs. So 3 areas that you might have a bit more conviction trading rather than messing around in the middle. Now, because I've hopped out and hopped back in, I've lost all your prior chat comments. So if you asked a question, since I checked out, I can't see them. You'll have to post them up again if you want me to look at anything. Where was I? I was over at dollar yen, wasn't I? Yes, that's where I was. So we've had this break into 153. Quite a few attempts to get up there, but we can't really stay up there. So it's becoming a bit of an issue. We're now seeing a bit of consolidation forming after we had this big move up. It's pretty much as I said on the day after we got the elections. Watch for these moves to continue, then watch them go into what next mode. It needs another catalyst, I think, to get this moving one way or another. And we're in the middle of that now, going through all this political mess, working out what's going to happen, what's going to come. Is it good? Is it bad? Is it what? As I say, I've got a feeling we may not have seen the full end of the weakness, but I think it's going to need probably some bigger headlines to get it going that way, which could happen over the days ahead. If it doesn't, there's a good chance that we might see a bit of a top forming here, but it's staying tight. As I said, I was looking at this 40, 45 areas possible support. We got down to 39 today. We did have that break yesterday. A bit of a headline impulsive move that didn't last long. So I'll keep an eye on that 25, 30-ish level as well. See if that becomes something. The main line is obviously 152. That's my big one. That's one of my monster lines. It's led to a big break. We tried holding there for a little bit, but then it got smashed through. It might have a bit more of a say on the way down, unless it's some big headline. Bank of Japan is going to definitely hike in October or something like that. So if you're trading the yen, you don't want to be stuck in the middle here. You're either leaning against these highs or you're looking for support down here and a break either way to get us moving. Dollar CAD, that has been looking interesting. We got the break. Yesterday's dollar moves coincided a lot with what we saw in metals, particularly silver. There's lots of noise going on in there. We're now hearing of potential shortages. Michael Brown in our room put up about lease rates. It's the usual stuff. Whenever you get a big move in a commodity, you start getting scarcity stories and this and that and the other, and it just leads to a bit of a frenzy. But for dollar CAD, we've had this big breakup. It's been a bit of a dollar move, as I said, related to those commodities, because this wasn't doing anything. So to get such a sudden move out of nowhere, in the dollar in particular, that just shows you what we are trading. We are trying to hold this 38.2 fib, which could be key. This is 38.2 of the 2025 move. It's also a level all on its own. It was support here, it was resistance here, and it goes back to here as well. So even before it was a fib, it was a level. So it's been one I've had pegged on my charts for a while, and here we are. Now we're just deciding which side we want to sit at this one. We are just trying to hold it, but we're not really pushing on. If we get a move down, 140 is going to be the level to watch, but obviously then this break point. Sometimes a level doesn't do anything one way, it can do something the other way, and that is pretty clear. Well, it was pretty clear here this morning in euro dollar. We've had this collapse down. We had the options around 116 yesterday that we were all watching. I did have a little nibble short because dollar pairs were dipping, and this one was just glued to that 116, which is what I look for when I look at expiries. We had a reasonable expiry there, 2.17 billion, and the price was holding up, so I decided to nibble a little short. Don't know if it was luck or good judgment, but it worked out anyway. I'm still a little bit short, but I've knocked it off down to the 1550s, got a little bit left. But this level here, this 115.73, it was a prior low. We've had a bit of action down here before, a bit of traffic before. That was a level I thought we might see something on the way down. If we did break, we didn't. It came straight through it. But then this morning we just found a bit of resistance into it. So that's what I'm talking about when I say sometimes levels don't do anything one way, but then they can do something the other way. If we start to sit above that, we're probably going to go for a look at 116 and see if we can recover a bit. But the market definitely getting a little bit of a flush out yesterday, stops going off and whatnot, and that was seen in quite a few pairs. As I said, silver was one of the biggest, or if not the biggest driver for all that. A very, very wild move, busting through that 50 level, shooting up to the 51s and back below, down to 48.5, then we're back up here. And so, yeah, this secondary move could be the one that has legs, because what this does is it clears out, everyone stops on one side, and then everyone gets long, and then everyone gets stopped out on the other side. All the short-termers come in and get messed around, and then the buyers who were doing this all the way through just soak it all up. So this move could be the one that actually stays above the $50 mark and then pushes it on. But we can't yet take out these highs. We're pretty much matching them. So that's a factor as well, because if that stays in play for long, then maybe we do get a bit of a steeper pullback. So if you're trading silver, use the 50 buck mark as your pivot line, but be very careful. There's very high volatility going on in this one. And do I think euro dollar and cable having FOMO? FOMO of what? What FOMO problems are they having? Yeah, but fear of missing out on what? It going down? I don't know. Who's got FOMO? I haven't got FOMO. Yeah, I'm not sure. I'm not sure what you mean by that, Bran. If you think people are not short enough or they're missing out on a short, I don't know. The fact that it's not continuing tends to say that no one's chasing this lower and selling it at the bottom, or it would still be going down. Cable, I've only got a cursory glance on this one, really. For me, it's usually all about the double O's and the 50 levels when we get big moves like that, and we're just messing around here. 132.90s, 133s. This area down here is the one to look at. That was the 38.2. That's where we saw a solid bounce. So if this does grind lower, that's an area you want to look at. Another test down here might spell trouble if we start breaking that. We are creeping ever closer to the budgetary stuff in the UK, so be mindful of that. Similar in euro sterling. Again, we've had two looks at the 38.2, so it's proved a solid level there. These fib levels are pretty important, okay, particularly when they're measuring the year's move. We've seen some pairs breaking the 38.2s even more. Then we've seen pairs like dollar CAD who have just touched theirs and sitting on theirs. We've got pairs like euro dollar that aren't even close to these yet until 112.50. So these fibs are good measures for trends. This isn't even the yearly trend. This is just for this phase. because we've had a lot of messing around in euro sterling prior. So anyway, we're back above 87, 86.90. Just going to a shorter one. We're seeing a little bit of support coming in against 86.90. We're seeing a bit of support coming in at 87. Same old levels above though. 87.20 is the main one. Need to get above there. Got a bit more resistance possible 30s, and then really it's all about the highs up here, which have proved to be pretty solid. So we've had a little mooch down. Now we're having a little mooch up. Again, if we hit that level, can't get through, that'll keep just this bearish phase in play that we're seeing at the moment. It will confirm the series of lower highs and lower lows, but we got into the zone and held it there. Aussie dollar, yeah, Michael, that's the other thing, that spreads in silver are just blowing out. Brokers are widening the spreads. The whole market's widening the spreads. So you've got to take that into consideration. If you're trading it, higher vol, higher spreads, just makes it a bit more dangerous. If you've got a volatile market, sometimes the best thing to do is let it do its thing, let it calm down, let the levels develop before you start getting back into it. Anyway, Aussie dollar, that has been sort of intraday bearish day to day. It has been grinding lower. We had this move into the zone that held, but the bounce pretty weak, up to 65.75, bit of an area we've messed around before, and then quickly we rejected from there and we've come back down into the zone. If we're breaking here, we're going to be looking at that low and getting into some of this old stuff here. So we could get a reasonably quick move on a break here down to 65.10, 65. But it's still looking okay. It's still keeping, the year's trend in play, although it's a bit of a messy one. Ignore the noise, then we are still in a gradual uptrend, and that's still pretty valid anyway. Anything else for anything else? I'm just keeping an eye on the screens. What's going on? Dollar China. That's tapping this 112 area. Yeah, I'm still a little bit short. If I see 112s, I'm going to take a bit off on that. Maybe even do some on another move down to that low. This one's bleeding lower a bit. The Chinese keeping the yuan stable, keeping it pretty tight on the fixes. We did have this headlines that's gained a bit today or yesterday regarding their curbs on raw materials. What's the precious minerals? I can't remember what the jargon is. You know what I'm talking about. That had Trump also saying, well, maybe we need to do some extra import sanctions or restrictions on China. So that might be something that blows up again. Michael just looked at that euro sterling. Not sure if you missed it, but I just literally just looked at that a couple of minutes ago. Anything else? What else can we look at quickly? Let's have a look at some of the other ones, because I know some of you boys and girls like trading this stuff. What should we go for? Euro Aussie. You stepped away. Well, as I said, Marco, it's looking perky above 86.90, but it needs to get through that 87.20 level. Euro Aussie. Some people like looking at this one. Again, we're still in this shorter term downtrend. So it's looking like this, is on its way low. We broke this low. So this is going to continue coming down. No real support until we get down to this sort of area, 74.60s, 74s, down to this area here. So we could be seeing a bit of a bleed lower in this one. Anything else? Let's have a look at the Swissy, see what that's doing, because that actually started to move yesterday. Dollar Swiss finally managed to wake itself up. Not that it's gone a huge amount, of course, but we're back above 80. This 80 level, we've been here before. We're back here in August. It's one of those levels we can't hold above for very long. We can look above it, but we can't hold above it and stay above it for very long. So again, if you're looking at trading a bit of the range between the lower levels down here and up here, then this is where you want to be looking at, rather than messing around in the middle. Ali, I don't know where you're at with your Swissy, but yeah, if you're looking at that one, these are the levels you want to be looking at just to try and reduce your risk, so you don't get caught out in the middle. Right, I'm going to call that a show because it's been a long week and I'm running out of puff for talking to you guys for so long, but I enjoy it, obviously. Thank you very much for coming to the Flow Show, everybody. Hope you've had a good week. Be careful with this volatility. You won't see me on Face later, but come and join the guys on Face later, and they'll go through it all over again. So have a great weekend, everybody. I'll see you all on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.